Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy! Alright folks, here we are on Tuesday, April 23rd. We're going to take a look at Tesla today. So with earnings coming up, I thought we'd come and see where Tesla might hit some support or resistance, whether it booms or busts, and of course some levels that it might sort of pin itself to if it does move relatively sideways. So we'll start here on the Webull platform, and then we'll flip over to the Think or Swim and call it a video. Now I am curious if you have a suggestion or a prediction of the price that you think Tesla will hit after earnings. Throw it in the comments. I'd be curious to see who gets closest or if anyone sort of nails it. So the nearest in levels that I have, 132.19 to the downside, so a support level for now, and then 154.42 to the upside. Now that is a decent percentage, change between those two levels, but given how volatile and how high volume Tesla is, I think that if it does move relatively sideways for Tesla, again, this isn't like GE or GM or, something like that, Pepsi, which not as volatile as Tesla. I think it could sort of move between 132.19 and 154.42 and still be considered a relatively sideways move. So if it does go sideways, I'm going to be looking for it to stay between those areas. Now, if it loses 132.19 or skips it altogether, right, just gaps down and doesn't even touch it, 112.60 and then 91. Now, I know that, these get very, very far away from the current price in both directions, right? I've plotted 91 to the downside and 314.30 to the upside. This is me just trying to cover a lot of ground so that hopefully this chart lasts for a while. And so whatever direction or whatever trend the earnings call may kick off in Tesla, hopefully this chart covers enough ground that it kind of suffices for several weeks or months. Now, if it does push to the upside, first things first, it has this downtrend resistance that it's been, holding on to a bit since like February, March, late February, early March, and it's, put in a decent amount of candles here, shucking right off of it. So if that continues to be the case, then it could certainly rise above 154. It would encounter this somewhere in like the 160s if it were to jump up here tomorrow and still bounce off of it and not push through it. But if it does push through it, 187.82, 258, that seems like an obvious one, right? The $200 psychological level, 231.86, 265.19, 280.84, 289.13, and then I did put a pin in the map, if you will, 314.30. But I do think that downtrend resistance is pretty interesting because it could rise quite a bit before it bangs into it, and I'd be curious to see if that does hold up. It's not, it's not the oldest trend line for sure, relatively new, but it has respected it pretty strongly in recent days and weeks. Now, on the Think or Swim side of things, Tesla is actually out of the lower bound of the channel, which might not be a surprise if you follow it closely and you know that it's been selling off. But, it's quite far out of the lower bound of the channel. So we had a good call by the TTM squeeze indicator here. It started triggering as it was sort of rising, trying to curl back toward the mid-range of the channel. And then it was pinning itself to the mid-range of the channel as it sort of finished up its trigger. And when it fired, boom, pushed it right out of the lower bound of the channel, tried to sort of stay in contact with the channel on these two initial candles, but then yesterday and so far today at least, just out there sort of in the abyss, sort of free floating in space, below the lower bound of the channel. So it is interesting that it's so sort of sold off at this moment, that it's out of the channel. And this channel, itself covers quite a bit of ground. I mean, the lower bound of this channel is at about 147. It stretches all the way up to 177. So again, like a $30-ish range to stay in the channel, and still it couldn't stay in the channel. So I'd be sort of interested to see how folks digest the numbers that are in the report themselves, the guidance, and how they sort of blend that with the recent sell-off. Do they feel that it's warranted, that the report almost backs up the strong selling pressure as of late and it drives it down further? Or do folks feel like it was an overreaction, it's been oversold off, and maybe even just a reasonably good or on par report, can bring it back into the channel. That'll be quite interesting to see. As you see at the moment, at least, really strong buy volume coming in, at least per this volume stack indicator. In the meanwhile, the histogram on the TTM squeeze indicator, as it recently fired, is still showing a pickup in bearish momentum as it's already situated outside of the lower bound of the channel. So quite an interesting situation here on the think or swim side of things. You see it, last time it was out, I guess this is the last time it was out of the lower bound of the channel, sort of free floating in space. Like we said, it kind of sidestepped its ways, slight movement upward to re-engage with the channel, and then made a nice clean pass right at the mid-range of the channel, but it couldn't sustain support to the mid-range and then sold off even further. So that's what we always look for when a stock gets out of the channel here. What happens when it re-engages with the channel, right? The initial re-engagement with the channel was treating the lower bound of the channel as resistance, which can often mean that there's just more bearish momentum that needs to be exhausted before it can get a better foothold or reverse trend. And then when it came in and tested the mid-range, that's exactly what happened. The bearish momentum was still there, still more to exhaust, and that's when we saw a further sell-off once again out of the lower bound of the channel and lower swing than the swing low that brought it outside of the channel in the first place. So that's why it's interesting to see what happens when it makes contact once again with the channel, and then the all-important mid-range of the channel to see if it's going to be able to gain any support there, consolidate along that level. And if it does consolidate along that level, does it start to trigger on the TTM squeeze indicator? These are all things that we sort of look for to try to gauge where the price might be going, purely based off of the chart itself, not necessarily any catalysts. All right, folks, I hope that your trading week is off to a good start. And as always, I appreciate you watching, and I will see you in the next video.